There she is. Michelle, what is the latest going on US markets where you are?
Yeah, I mean, I suspect this is one of those days where many traders wish they might have been on holiday, stayed at home to avoid really a pretty brutal start to the trading session. We saw the Dow Jones Industrial open about 1,000 points down. It has recovered slightly. Last time I looked, it was down about 900 points. The Nasdaq, the tech-heavy index, which in many ways has been the focus of so much attention recently because of artificial intelligence and the expectations of what that will do for growth prospects in the economy. That has been in focus. When it opened, it was down 6%. It is now down about 2.5%, the same with the S&P 500. And of course, all of this has been sparked by Friday's disappointing jobs report. We also saw earlier last week a disappointing and weak report on manufacturing. So that really sort of saw a re-emergence of concerns about how strong the US economy is and whether or not America's central bank has been too slow to cut interest rates as other countries have done, like the ECB.
Yeah, and Michelle, of course, it follows big sell-offs across Europe and Asia as well. What's been happening there?
Yeah, I mean, what we saw overnight in Japan really hasn't been seen since 1987. It suffered, the Nikkei suffered its worst trading day in many years, in decades, several decades. Again, there are a couple of things at play there. One of the areas people are paying close attention to is the yen. We saw Japan's central bank increase rates recently, and we've seen the yen strengthen against the dollar. That is another factor that's feeding into this global market sell-off. In Europe, there have been losses too, perhaps less pronounced, but really following on from what has been happening in Japan and also right here on Wall Street.
Just to stick with the States, Michelle, as you're there, the Chicago Federal Reserve President Austin Goolsbee, a mildly influential figure when it comes to rate setting, has been saying that the central bank would react to signs of weakness in the economy, indicating himself interest rates could be too restrictive now. What is the Fed likely to do next?
Well, I think even before today's sell-off, people were anticipating that the Federal Reserve would cut interest rates in September. The question now, I think, is by how much? And between now and then, we're going to hear a lot from various Fed officials because you've got essentially a tug of war going on at the moment between the markets who feel that the Federal Reserve is behind the curve, and then you've got the Federal Reserve itself, and we heard from Austin Goolsbee also saying today that you can't just base a decision off one or two data points, that they need to see more evidence before they act. And so they're reassuring the markets that, yes, if there is weakness, they are prepared to cut more aggressively, but at the same time, one or two jobs report does not, in essence, suggest that recession fears are sort of where we're at right now in the US economy. And I think if you listen to what US economists are saying, they are split too. So Citigroup, for example, is suggesting that the Federal Reserve will cut by 25 basis points in September. 50 basis points in September. That is much more than others like Goldman Sachs are predicting. They are calling for a 25 basis point cut in September. So expect a lot of volatility between now and September 18th.
All right, Michelle Fleury, live for us on Wall Street, and amongst all that activity, thanks for joining us. Well, let's speak now to the head of foreign...
Fleury now. Michelle, hello to you. So we've outlined briefly there the reasons behind this. Tell us more about them.
Yeah, I mean, I think we're seeing traders once again focusing on economic conditions, primarily here in the United States. As you just referenced, there was that jobs report last Friday that was disappointing. I think that made people sort of concerned that cracks are starting to appear in what had been a strong bright spot in the US economy, and that is the labor market, whilst America's central bank was fighting interest rates and higher prices by raising interest rates. So now traders are starting to ask themselves, well, is the Federal Reserve, America's central bank, behind the curve when it comes to lowering interest rates? But it's not just a US story. If you look around the world, recent surveys out of the Eurozone have showed there is some concern about the impact of geopolitical tensions. Obviously, you've got the war in Ukraine and you've got tensions in the Middle East. In China lately, we've seen factory data that has been disappointing. And so taken together, I think the data we saw last week out of America, as you say, the world's biggest economy, I think that spooked people. And since then, we've seen now sort of a building frenzy in the stock market coming to a head really in the last 24 hours. In Japan, we saw the Nikkei having its worst day since 1987. Here in the United States, that really continued at the start of the trading day. Now, some of those losses have sort of been clawed back, but we're still down sharply here.
OK, so some losses clawed back. Lots of people watching to see if the situation stabilizes. What's being done behind the scenes to try to bring a bit of stability into this situation?
Yeah, I mean, I think people on this side of the pond are talking a lot about what America's central bank is doing and what they're going to say. So one of the kind of key figures, if you like, in central bank world here in America, Austin Goolsbee, who is the president of the Federal Reserve of Chicago, one of the people who sits around the table when they make that interest rate decision, he was talking today. He obviously was not going to reveal the hand of the Fed, but he did say that they would act if they saw weakness in the economy. That being said, they wouldn't overreact to one piece of economic data. In other words, reminding people to sort of remain calm, if you like, and not have a knee-jerk reaction just because the markets fall so sharply. That being said, the question is, will this kind of language coming out of those who work at the Federal Reserve, will that help calm nerves in the weeks ahead? Because the key meeting that everyone is looking towards is September 18th. That is when many economists on Wall Street predict the Federal Reserve will trim interest rates. And a lot of the conversation in these last sort of few days has been around by how much will they cut interest rates. And between now and then, I think there's a lot of room for speculation and so potentially a lot of room for volatility on the stock markets.
Michelle, thank you very much. Michelle